what is a qualified mortgage, and is anybody going to get any loans approved come 2014? This is a great question and one of the hottest topics in the mortgage industry today. And now we're actually getting a lot of consumers starting to worry about, what does this mean to me? Am I going to be able to get a home loan next year? Can I buy a house? Can I refinance? What's going on? So a little background, the Consumer Financial Protection Board back in 2010 instituted a new set of rules and regulations specifically targeted to the mortgage industry. These new rules and regulations are set to begin January 10th, 2014. I'm going to touch on just a couple or three of the most important parts of this new legislation, and we can talk about how it really relates and what it means to everyone. The first aspect of the new rules is that the CFPB has come out and said, look, we're going to limit the total debt ratio to 43%. Now, what is the total debt ratio? Well, that is a calculation of a consumer's principal, interest, taxes, and insurance on the new proposed loan, plus any homeowners association dues, or if you have any mortgage insurance, depending on what type of loan product you're using, plus all your other obligations, car loans, a lease, minimum payments on your credit card, student loans, if you have child support or alimony. All those are then added to that principal, interest, taxes, and insurance number, and then you divide that into your gross monthly income, and you get a percentage. So the CFPB is saying we don't want nobody with a debt ratio of over 43% is going to qualify under the new regulations. Well, there was a lot of kicking and screaming in the mortgage world, and the CFPB since has recently come out with a new set of guidelines that are specific to Fannie Mae, Freddie Mac, and FHA loans. So basically what they're saying now is if you get an automated approval from one of these government-sponsored entities, then you will be allowed to use the calculated debt ratio if it exceeds 43%. Well, I got to tell you, just about every loan that I know of being done these days all have to be approved through either Fannie Mae or Freddie Mac's automated underwriting system. It's just how loans are done today. It's the benchmark of the way loans are underwritten for Wall Street. And so really a 43 debt ratio, if you're allowed to go higher because Fannie or Freddie says you can, well, that's what we're already doing. So I really don't see a whole lot of impact on people qualifying. In fact, some of the studies that have come out said that in 2012, only 12.8% of the loans that were done would not qualify under the new guidelines. And recently I've heard the number as little as 5%. And these numbers don't even take into account the new exception that the CFPB just announced, that you can exceed these numbers and follow the Fannie Mae, Freddie Mac automated underwriting guidelines. So really, people, there's going to be not a lot of changes. Most people are going to qualify, and I really don't see any significant impact on mortgage lending as it relates to the new CFPB rules.